People in high tax areas are swarming their local town halls in a rush to pay their taxes. That is, to prepay their property taxes. This year, it's all deductible, but next year, under the new tax law, it is limited to $10,000. Now, the IRS hasn't decided yet whether they will allow this. If you end up in the alternative minimum tax, it's all for naught. So is it worth it?
All right, joining us, we yanked two financial professionals away from their phones, which I'm sure have been ringing off the hook from their clients. There they are, Ed Slott, CPA and founder of IRAhelp.com, and Carrie Coghill, President and CEO of Coghill Investment Strategies, both joining us here. Thank you for joining us.
Hey, great to be here.
Tell them what you said during the commercial here. You've never seen this before.
I've never seen people lining up, pushing people out of the way. I was here first. I want to pay my taxes.
They're very anxious to do that, right?
Yeah. But first thing I would say, ask your tax advisor. As you just said, most of these people are subject to AMT, right, alternative minimum tax, which means they don't get the deduction anyway. But they run down there. It's like Black Friday of taxes.
So let's be clear, if this happens, because they've tweaked the rules, so you might not know if you are going to get hit with the AMT right now, but you might think, well, worst case, I should prepay these taxes. What happens if you do that and you can't deduct it? Then you still prepaid your taxes, but you just can't take the deduction?
Right. And we don't know, even if you do prepay your taxes, as you said, IRS hasn't weighed in on it. Even though Governor Cuomo issued a proclamation on Friday saying you can, he's not the judge.
Carrie, I'm curious. I mean, Montgomery County down in Maryland, they wouldn't allow people to prepay their property taxes until yesterday. They convened a special council meeting where they voted to allow people to prepay, but they did say it's ultimately up to the IRS whether to allow those prepayments to be tax deductible. What is going to decide that for the IRS? I mean, what is it they have to decide specifically?
Well, I think the big question when it comes to how the IRS is going to rule on this has to do with whether or not you can prepay a tax that hasn't accrued. And to the best of my knowledge, there is some case law precedent that would suggest that you can't prepay this tax that when you haven't incurred it yet. So I think from our perspective, as we have been fielding calls from clients, you know, there are some baselines here. If you itemize your deductions now and you know you're not going to itemize next year, you're going to take the standard deduction, and you don't fall into AMT, we are seeing people go out and prepay because you're just creating some flexibility in what you can do with your taxes. But every county, every state is different. Some municipalities aren't even allowing you to prepay.
And if you pay via escrow, then it becomes even more complicated or harder.
Well, that's a whole other thing. Remember, we're coming down last couple of days of the year. You're going to call your bank. They're going to call the local tax. The money will be in escrow. This is all going to happen in a few hours.
Right.
Highly unlikely. And some of the people down there got told, well, you don't even pay your taxes here. The bank pays them through your escrow. Yeah, well, I'll have donuts anyway.
Yeah. And I do think... as Ed was saying, you know, this is something that you need to really take a look. Everyone's situation is very different. Everyone's locality is different in terms of how to prepay. I personally am going to prepay because I'm in a gap, and I've been advised that, you know, I'm not going to be able to use it next year. Why wouldn't I prepay? Now, it's going to take some time, and I have 2 days to get this executed, and it's 15 degrees outside, so it's not a lot of fun. But at the same time, I think that for some people, having that flexibility will make sense. For other people, it doesn't make sense.
Well, I just wonder, you know, is this all going to push the IRS to have to issue a ruling saying...
I have a feeling they may come around. Remember, this is not a big event. It's a big event. It's a one-time event. They only have to give some flexibility and be nice for one time, and this issue will never come up.
They may say, well, wait a minute.
Yeah,
we're losing the revenue.
In the spirit of the tax bill where they're trying to pay down the debt, why would they allow for the deductions on prepaid taxes?
Because they have been known to be nice people.
Really? You
the IRS.
Who? I'm taking
I'll
names.
bet you. I'll make a prediction. I'll bet they come across and say, you know, for this one time we can kind of stretch. Remember, they're stuck in the confines of the law, but they still can write regulations and kind of stretch it like a rubber band sometimes.
Well, I will say there's, these reports I mentioned about Chris Christie are that the New Jersey governor tomorrow will issue a proclamation, just like New York's governor has, ordering municipalities to accept these taxes early. But if the IRS was going to push against this, I would hope that by now they would have tried to make that clear instead of coming out. But you know what? It's caveat, how do you say, payor? I mean,
it's no harm, no foul.
No one's going to cry for you if you don't get to take that deduction.
Right.
I mean, the only thing you lose is the tremendous interest on that money if you pay it early.
Yeah, yeah.
Right. And you know, the other thing that I think is important to realize is that for people that will itemize next year, you have to be very careful that you might not want to be prepaying, because that can really cause you to be in a bad situation next year. So it really is a very personal situation.
So if you're, because it won't be high enough, or
right, well, because if you're itemizing your deductions and you're right at that cusp of taking the standard deduction versus not, and you've prepaid your property taxes that would put you over that standard deduction amount, you might find some lost value next year.
And there are people I read about today taking out home equity loans to come up with the cash to pay for that. So
which, under the new tax bill, are no longer deductible. The interest is no longer deductible. So, and also, in certain areas, like here in New York, that $10,000 is, so everybody's going to be over the $10,000. So.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.